There are many different types of discounts that can be given to a supplier. Many are already calculated in the purchase order and are fixed by the time the invoice arrives in accounts payable. For example, if you get 5% discount when you order a quantity of 5,000 or more, then assuming that you order at least a quantity of 5,000, then the amount that will be posted on the goods receipt, and therefore proposed on the vendor invoice, will already be less 5,000, regardless of when the invoice is paid. The type of discount shown in the slide is a cash discount for paying early. In other words, the price on the purchase order is fixed, for example at 1,000, and you have 30 days to pay. But if you pay, for example, within the 10 days, you can then deduct 3% discount. In this case, if you miss the 10-day deadline but still pay before 20 days are up, you can get a slightly lower discount of 2%. The discount is usually agreed by supplier and set in the supplier master record terms, but it could also be given only on a specific order, in which case the payment terms in the purchase order or invoice will need to be updated. The key point about this discount is that you only get it if you pay early, you don't get it automatically. Some countries have slightly different rules around whether tax or VAT is calculated before or after the discount has been deducted, and also whether sales tax is contained in the base amount for the discount calculation. This demo will be using a UK company code. In the UK, the VAT is calculated on the full amount, and if a discount is taken, then the VAT is adjusted when payment is made. However, there are two ways to post this based on document types. First, I'll post an invoice using the ordinary document type with the app Create Supplier Invoice and using the standard document type RE. For speed, I'll post directly to a GL account without raising a purchase order, but the principle should be the same. I scroll down and add a GL account item, enter the GL account, amount, tax code, and cost centre. Although not shown in the demo, the supplier has the discount term shown earlier, in other words 3% for paying early. But you can see that when I simulate, there's no sign of any discount and the VAT is calculated as normal. In order to show you the difference in posting a gross and net document type, I will now post an identical invoice, but using the net document type RN. I could also have used KN, which is another net document type. I enter everything in an identical manner, same accounts and tax codes, etc. I scroll down and add a GL account item, enter the GL account, amount, tax code, and cost centre. But now, when I simulate, you can see that the vendor and VAT amounts are the same, but discount has been deducted from the cost and accrued in a clearing vendor discounts account. The discount will be held in a clearing account until the payment is made, at which point it can be deducted from the supplier. If the cash discount is not deducted, it goes back to the cost account, but if it is deducted, then it transfers from the clearing account to the discount account, and the tax is adjusted. We'll see examples of the payment posting in the next slides. The slide shows the payment run for the first invoice from the demo. As you can see, a cash discount of 36 has been deducted from the original invoice of 1,200, inclusive of tax. This slide shows the posting for the payment for the first invoice we saw in the demo, in other words using the normal document type. The discount is simply deducted when the payment is made. An adjustment is made to the VAT account for the VAT related to the discount. This slide shows the payment run for the second document using the net document type. As you can see, the same amount of cash discount has been deducted from the vendor, in other words 36, which is 3% of the original amount of 1,200, including tax. This slide shows the posting for the payment for the second invoice in the demo, in other words using the net document type. As you can see, the amount on the clearing vendor discount account is now transferred to the P&L account for discounts taken. There are various other permutations depending on the local legislation and regarding how the tax and discount are calculated. But this slide is an example of using the net discount document type so that the discount is posted to a clearing account. But in this case, the invoice was not paid on time. Instead of posting the discount back to the original cost account, it is posted to a lost cash discounts account instead. An invoice without a purchase order may still need approval or confirmation that the purchase took place and that the price is correct. Given that, as the invoice is here, it's a bit late to say the goods cannot be ordered. Maybe you can't post it straight away. Perhaps the accounts payable manager needs to check the GL account and cost assignment. Invoices should always be entered into the system so there's a record that the invoice has been received, even if it cannot be paid straight away. Assuming the invoice is complete, you could post the invoice and block it for payment, but then if there's a mistake, it would have to be reversed out and reposted correctly. So in some cases, it may be better to put the invoice on hold or park it. Both parked and held documents can be found in the supplier invoices list by selecting the relevant status in the filter bar, but a held invoice or parked invoice without an amount will not appear in other reports, for example the supplier line items report, as neither will produce a finance document, although they both produce a material document. To park or hold an invoice, you simply select the Park or Held button at the bottom right instead of the Post button. If it's a large invoice and you are, for example, not going to complete it before lunch, rather than leave it on the screen, you could put it on hold and then retrieve it when you get back. Held invoices tend to be held for a shorter period and just for you to return to it and post, whereas parked invoices are often posted by somebody else. With a parked invoice, if you've entered an amount before parking a document, then a finance invoice will be produced and you'll be able to see the parked documents in the managed supplier line items and some of the general ledger reports, if you include parked invoices in the selection criteria. Note that in some reports the word verified is now used instead of the term parked. You can also set up a workflow if you regularly have parked invoices that need checking or approving. This slide shows an invoice parked against a purchase order item. You can park a document with or without a purchase order, but you must have a company code, dates and a supplier number in order to get a material document number. And if you enter an amount, again you'll also be able to get a parked finance document number. Even if you've entered a purchase order number, you'll not see the purchase order history if you've not yet selected a line item, or cannot because of a missing goods receipt. Once the item is selected, it will then appear in the flow as in the slide. You can also see and drill down into parked invoices in the Accounts Payable Overview app F2917, which we'll look at in more detail in Section 7, the main reporting section of the tutorial. The overview consists of a number of different cards which are all part of one app and can be rearranged or hidden as required. Some objects you can drill down into, for example, a specific parked invoice. You can also drill down into the apps behind some of the cards, for example the cash discount utilisation. Where there's a drop-down box, you can change the layout of the card itself. For example, you can display parked invoices in entry date, order or by amount. And in some cases, when you change the drop-down, the chart changes as well, for example from line chart to bar chart. With credit notes, it's important to understand the type of credit note, whether it's a price or quantity correction, in order to post it correctly. Price adjustments do not touch the GRIR account, but quantity adjustments do. When you open the app Create Supplier Invoice, the first field in the top left refers to the transaction type. Most of the time it will default to the last used transaction, usually an invoice, but there are 3 other transaction types that you can use. A credit memo is the exact opposite of an invoice. In other words, if you post an invoice for a normal item with a valuated goods receipt that updates the GRIR account, then posting a credit memo would do exactly the same thing in reverse. The other 2, the subsequent credit and subsequent debit, do not update the GRIR account, so you would only use them for price corrections. Note that in the purchase order history and accounts payable process flow, the subsequent credits and subsequent debits are both referred to by the same name. So for example in the slide, the last document is a subsequent credit, and you can see that the amount is negative even though the description states subs deb log IV. In the example in the slide, a goods receipt for purchase order for 5 expense items at £10 is posted, which debits the cost account and credits the GRIR account with 5 times 10 equals £50. If the invoice arrives for 5 items at £12, the GRIR account has to be cleared because the quantity matches. So, ignoring taxes, the vendor will be credited with £60, but the GRIR account will be credited with £50, leaving a difference of £10, which is posted back to the original cost account. The supplier has then been chased for a credit note for the difference, which needs to go to the original cost account and not the GRIR account. In the slide, a subsequent credit transaction type has been used to post the credit note, and as you can see, it's gone to the original cost account, leaving the GRIR account untouched as 0, and the total cost as £50 as per the original purchase order, which is correct, and we now have a balance of £50 to pay to the supplier. The other 2, the subsequent credit and subsequent debit, do not update the GRIR account, so you would only use them for price corrections. The invoice was originally blocked for payment before the credit note was received, but once the credit is posted and the 3-way matching is refreshed, the payment block is removed automatically. If you use a credit memo for this, then the credit will go to the GRIR account, leaving a balance of 10 there permanently, or at least until somebody spots it and writes it off, and the costs will show as 60 when in fact you only paid 50 in total. In addition, the invoice will remain blocked for posting because the system will see a price difference. With stock invoices, the process is similar, although the postings will depend on whether, for example, the stock is valued at standard price, in which case any price differences go to price variance account, or at moving average. The example in the slide is a simulation of the postings for a price correction for an item of stock valued at standard price. As the stock was originally updated at standard price, the correction has gone to the price differences or variances account. The tricky thing about moving average prices is that if there's very little or no stock left when you post a price credit, you don't want it to update the stock value because otherwise you might end up with negative stocks. Stocks are also a problem when it comes to quantities. If you've been invoiced for the wrong quantity, you can post a credit memo as normal. But if the goods were sent back because they were damaged or incorrect, you may need to match the credit with a returns purchase order or a goods issue, rather than the original goods receipt, depending on the returns process. Once an invoice has been paid or cleared, like the example in the slide, it can no longer be reversed. Technically, you can reverse the payment or clearing in order to reverse the invoice, but usually reversing a payment is quite complicated. You may not be able to reverse the payment for just the one invoice if the payment was for a number of invoices for the same supplier. And you need to take into account any bank transfers that have been created and any checks that may have been printed and linked to that invoice. You also need to reverse both the material document and the financial document, so you cannot use the general ledger transaction. You need to reverse the invoice in the same way that you posted it. In most cases, this means with the material document for supplier invoices. In this slide, I have selected an invoice from the supplier list that has not been cleared and drilled down into the document. As you can see, there is an option at the top right of the screen to reverse it. As I mentioned before, you can only reverse the document if no items in it have already been cleared. So you can click on the Journal Entries button to the right of the Reverse button, which will take you straight into the Display Process Flow Accounts Payable app, so you can check whether any clearing has taken place. When posting a credit memo, as described in the previous section, you can enter what you want. You can credit the original invoice in full or only partially, enter comments, change the document type, payment terms, and so on. With a reversal, you can only reverse the entire document in an almost identical way to which it was posted. The reversal document type may or may not be the same as the original document, but this is set in the configuration and cannot be changed during the reversal. When you click on Reverse, you have to enter the reason for reversal. If you leave the date blank, it will reverse on the same date, or if the original date is in a closed period, you can enter a new date. Depending on your configuration, you may have different descriptions, and some options may have restrictions on whether you can change the date or not. Once reversed, the original document will show the status reversed, and you can see the document that it was reversed by and drill down into it if required, by clicking on the blue document number under the Reversed By heading. Note that even though the invoice on the supplier account has been fully reversed when the material document was reversed, they do not clear automatically. Both are still outstanding and have to be cleared as a separate task on the supplier account. You can use the Manage Supplier Line Items app F0712 to edit one or more documents. You cannot change fields like amount, dates, supplier, document type and so on. You can only edit certain fields, such as those shown in the slide. I'm going to demonstrate how to use the Mass Change option in the Manage Supplier Line Items app, F0712. You can also perform other tasks on multiple items, for example manually blocking and unblocking a number of invoices at the same time. To change a field in one or more invoices, go into the app and select the relevant invoice or invoices and choose Edit Line Items. As you can see, the text field for the first few items is completely blank. I'm now going to change just the text field for the first 3 items by selecting them and then in the pop-up typing test 12345 and clicking on the OK button. As you can see, the text on those 3 items has now changed. Be very careful that you've selected the correct items and correct fields and enter the correct new data, as this will overwrite whatever already exists in that field when you choose OK, and there's no undo button. You can use the Display Item Changelog app, F2681, in order to see the changed items. You can adapt the filters, for example to filter on the items that have the new value equal to test 12345, or the date or time changes, or by supplier or user, etc. A useful tip is that if something doesn't seem to work in the filter bar at the top, go to the Settings button and use the filter there. I tried to search for a value in the filter bar, but it capitalised and it didn't seem to find it. But when I used the Settings button, it worked better. As mentioned in Section 2, the one-time vendor functionality is not currently working in the standard Create Supplier Invoice app F0859. The one-time vendor functionality allows you to create one generic vendor account without an address or bank account in order to post one-off invoices. In other words, a generally small invoice from a vendor that you will never use again, and therefore don't want to go through the bother of creating a full business partner. You can create the vendor business partner with a special group, and when you enter the invoice, an additional pop-up appears for you to enter the address and bank details for each invoice. This functionality is currently not supported with the new Create Supplier Invoice app. However, for those used to the one-time functionality, you can still use it with the app for the GUI transaction FP60, called Create Incoming Invoices, or the app Create Supplier Invoice Advanced, which works on the classic GUI transaction Miro for purchase order invoices. I will now demonstrate the one-time functionality with the Create Incoming Invoices, which is based on the classic GUI transaction FB60. First, I enter the generic one-time vendor account that's already been created. Then I fill in the usual header fields, for example amount and invoice number, plus tax codes and taxes where relevant. Then in the line items I need to enter the GL account, amount, tax code, tax jurisdiction if relevant, and cost centre. As soon as the system checks, or if I press enter, I will get a pop-up to fill in the address and bank data of the one-time vendor. In this case, it was only when I started to fill in the line items, but had I pressed enter immediately after entering the vendor number, it would have popped up then instead. I enter the name of the one-time vendor. This and the address and bank information is only held at the invoice level, not at the master data level. So next time I select the one-time vendor account, I will have to re-enter the name, address and bank data, which given the name one-time vendor should anyway be different each time. I filled in the bank data and I'll just go back and put in a few lines of address data as well, and click on the enter icon. So to finish off completing the tax and cost object data, some of the suggested fields to fill in are showing yellow. But when I press enter after completing all fields and the system performs a check, it turns out that my tax jurisdiction code is too short, so I'll just add some more zeros. I click on Simulate to check the postings and everything looks okay, so I'll click on Post. Note that invoices created in this way, in other words with the Fiori app based on transaction FP60, will not create a material document and will not appear in the supplier invoices list. They will only appear on the supplier account and in the journal entry apps. The Import Supplier Invoices app F3041 allows you to import a number of supplier invoices in one file. You need to think about putting in the appropriate checking and approval steps, and if you have more than 500 entries, you will have to split the upload into separate files. Invoices posted in this way will appear in the supplier invoices list and will have a related material document, but they cannot be posted against a purchase order. If you do not have a separate travel expenses process set up or separate software and just want to post expenses against an employee vendor account, you can use this template if you don't want to enter them one by one. The first step is to download the Excel template in the language you prefer. You simply click on the download template and, depending on your browser, either save it or open it. I've already downloaded and filled the template with 5 journals. Note that only the most common fields are visible immediately. The less used fields are hidden, so if you're copying and pasting, be careful not to accidentally copy into hidden fields. Blue is the header data and yellow or amber are the GL items. In this template, I started entering data on the 7th row. If you have an invoice with multiple lines, for example invoice 1 has a total of 1500, but the first line is 1000 and the second 500, you need to enter 1500 in the blue header part of both lines, and then the 1000 in the first line item in the yellow GL account part, and 500 in the second line item in the yellow GL part. The first column, the invoice ID, is not actually posted to the system. It must be numerical, and its purpose is to link related items together, for example where one invoice has several lines. Most of the default columns that are initially visible are fairly self-explanatory and match the fields in the Create Supplier Invoice app. Note that you can extend the template if you require additional fields. Next, I will import the file. I've deliberately left some errors in so that you can see how the error handling and logs work. To upload the file, I simply click on Browse and select the completed Excel file. Before posting, I want to check that there are no errors, so I can select all the entries using the box at the top left and click on Check. The pop-up box shows 5 errors in my case. In order to see what the errors are, I click on Show Log in the pop-up box, but there's also a Show Log icon in the main screen if I forget or want to double-check something. In the log, I see there are 5 errors. I can look at the detail by selecting the right arrow, and I can immediately see the cost centre does not exist and I've entered the wrong date in the file. So I go back to the Excel file and correct it. I can't import the new file until I get rid of the incorrect items by deleting them. Then I select the corrected file and check that you can still see there's still one error because 4 of the lines are green, but the last is still red, so I missed one correction. Once again, I have to delete the postings and re-import until all the invoices are correct and highlighted in green. If I want to check any of the invoices before posting, I can drill into them by clicking on the right arrow. As they all seem correct, I can select them all and click on Post. When I check the log, if I drill into the messages, they only have the warning message relating to the due date of the invoice being in the past, and I can also see the document number that was posted. Just to double check, I'm now going into the supplier invoices list and selecting the company code and the invoice date. And you can see the 5 invoices posted, along with another one posted earlier on the same date. Recurring journals are perhaps more of a general ledger function than accounts payable, but I thought it worth mentioning so that accounts payable are at least aware of the functionality. Also, anybody familiar with the recurring journal functionality in SAP ERP may remember that it's quite complicated and involves a number of different transactions, and I wanted to show how much easier the new Fiori app is compared to the old functionality. In one app, you create a single journal template which can then be posted repeatedly for a number of periods. A typical use case might be, for example, where an invoice for perhaps a year of expenses, such as insurance or lease or rent, is received, but you don't want the cost of the whole invoice to go into one single period. Rather, you want to spread it out over the whole year or whatever period the invoice refers to. The first step would be to post the invoice as usual, but to a balance sheet account such as a prepayment account, and then transfer, for example, 1/12 of the amount each period to the cost account in the P&L using a recurring journal. I'm going to do a short demo using Manage Recurring Journal Entries app F1598. When I first select the app, you can see that it shows 0 recurring journals currently exist. On the first screen, if there were any journals, you would see an overview of those journals with the posting status, how many have been posted, and when the next posting date is. To create a new journal, you simply click on the Create New Recurring Journal button. I need to enter the usual header data, such as the journal type, company code, and any reference or text required. Then the relevant line items, for example in this case crediting the balance sheet and debiting the insurance account. I also need to open the line items to enter any relevant cost object, profitability or tax data. Then I need to enter the recurrence rule. In other words, when the recurring journal posting should start, how frequently, for example weekly or every period, and for how long. I would normally enter a date, or 12 months, or however many periods the invoice refers to. But I'm leaving it as just one period as I want to show you how to change it later. I also enter which day of the month I want it to start. This could be the first or the last of the month, or any other day. I could also set it up for quarterly by choosing every 3 months. If there is any other requirement, it's also possible to create a schedule of your own in the configuration, and then select Posting Schedule instead. When everything is complete, I click on Save. And now you can see the journal shown on the overview page. Note that this journal is more of a template and does not actually update anything in the general ledger yet. When I want to post one or more recurring journals if there are more than one, for example at the end of the month, I simply go to this overview page, select all the journals I want to post, check that the next posting period is the one I want, and click on the Post button. In the pop-up, I will leave it as the default posting date and simply select Post. You can see on the overview that the posting status is now green, and 1 out of 1 item has been posted. If I select the arrow on the right and scroll down, I can see the journal entry. Let's say at this point I realise there should have been 12 entries, not just 1. I can amend the number of items to 12 and save. On the overview screen, you can now see 1 out of 12 items showing as posted, and the next posting date is the 1st of November. I'm going to post November and then go in and display the recurring journal. Obviously you wouldn't normally post the journal until 1st of November or around that time, as normally you wouldn't have the next period open yet. When I scroll down, I can see the status of each monthly journal and also the journal entry number of those items which have been posted, plus the total of all journals. I can even post from here, so for example I'll post December's journal. If I click on the journal entry number and go into the Manage Journal Entries app, you can see that this is a real document with an actual debit and credit, updating the general ledger accounts. If I go back to the overview page, you can now see that 3 out of 12 items have been posted. Although not in the filter bar, if you have a lot of recurring journals, you can set the settings button to filter on the entered by field to see your own journals. To see whether any changes have been made to the journal, I can use the app based on the classic GUI transaction FBD4. I enter the document number of the recurring journal. I can see that 4 fields have changed automatically. In other words, the date of the next run changes each time I post the previous run. If I click on the changed fields, I can also see 4 changes. The one which I just did was change the number of occurrences, and the others are changes which changed automatically because of the change in the number of occurrences. If I look back at the app itself, you can now see that the tile shows that one recurring journal exists. We will cover a number of reports in section 7 of the tutorial, but I think it's worth showing a few briefly now that are relevant to this section. The Supplier Invoices List app F1060A is often used as a starting point to find a specific invoice, to display it, reverse it, or delete draft invoices. But it can also be used for reporting purposes. The report can look quite different depending on what you choose in the settings. The columns are less flexible than some reports. For example, you can only sort by clicking on the column header. You cannot resize the column or drag and drop it, but you can use the settings button to rearrange the columns and sort by multiple criteria. You can also use grouping, for example, to group invoices of different statuses together, such as posted, parked, held, or group invoices by supplier. And you can, of course, export them all to Microsoft Excel. Another way to see invoices is using the Supplier Invoice Items by Account Assignment app F2631. Here I have grouped by supplier, sorted by status, and filtered by date range, but there are a number of additional options to filter and group, or add and rearrange the columns. We have already seen the Manage Supplier Line Items report being used to display and edit line items, but it can also be used for reporting. In the slide, I have grouped the items first by company code, and then by supplier, and then by journal entry type using the group functionality in the settings button. Also in the settings button, I could do more advanced filtering and add, remove, or rearrange a number of columns. In this app, I can also drag and drop columns and increase the width of the columns. There are a number of apps to analyse the processing of invoices and discounts. I'm now going to show you 4 apps which are very similar in the way you can add dimensions, change charts, and so on. The first 2 apps have the same ID, F1745. First, we'll look at the Invoice Processing Analysis app. The default here is by a column chart by timeline, with the blue being the total amount of invoices and the orange the number of line items posted in each period. If I change the drop-down to Supplier, we now see a bar chart by supplier. I can also see the charts by processing status and by user. I'm going back to the timeline and opening out the filter bar. I could adapt the filter bar to add, for example, the company code, but I can also use the quick drop-downs to choose the company code, for example OF01 and OF02. I will close up the filter bar now so that we have a bit more room to see the chart. I can use the down double arrows to add dimensions, and the double up arrows next to them are to remove the dimension again. There are not many suppliers in these 2 company codes, but I can see, for example, in April there are amounts for 3 suppliers. Next, I will make the chart full screen and zoom in a bit. I can change the chart type to a number of different things, for example a line chart, pie chart, a bar chart. And of course I can also export to Excel. And if I select the Settings button, I can put different measures in the axes and choose different dimensions. Let's go back to the full screen. The next app has the same ID, F1745, but it's called Invoice Processing by Time. This opens out to show invoices by lost cash discounts, but again I can use the drop-down to change that to, for example, invoice amount, number of invoices, or I can see tables instead of a chart for the overdue period or individual invoices. Again, I have the option to add additional dimensions, change the filter, change the charts, etc. The next app is the Cash Discount Utilisation app F1736. This defaults to the timeline, i.e. by period, but I could change to company code, region, supplier, payment terms, or the timeline in a table. I can add dimensions, change charts and filters, etc. The next app is F1735, Cash Discount Forecast. This time we see a bar chart by company code, but I could change it to supplier, payment terms, or next payment date. Once again, we have the same options with the additional dimensions, charts, filters, etc. There is one useful setting in the Edit Supplier Invoices settings, which you can turn on or off. This may or may not be already set in your system. If it's not set, then when you post a supplier invoice, you will only see the material document number, similar to the box on the lower left of the slide. If in the settings you've ticked the box Display Journal Entry, similar to the box on the top right of the slide, then when you save a supplier invoice, you'll also see the journal entry number similar to the box on the bottom right of the slide. If you used the GUI in the past, this setting is the Fiori equivalent of the IVF iDisplay field in the user parameters, which still exists, by the way. With the new Fiori app to create a supplier invoice, some of the settings are automatic, but if you're still using the Fiori app based on the classic FB60 GUI transaction, you may want to look at some of the settings by going into the editing options in the FB60 transaction. The slide shows the editing options, with the box on the lower right showing the options that don't fit on the initial screen. Personally, I prefer to have Calculate Taxes on Net Amount box set. This means that with an invoice for $1,200 which has a net amount of $1,000 plus tax of $200, you enter the full amount of $1,200 in the header and only $1,000 in the line item. Whereas if the net amount box is not selected, then you'd enter $1,200 in both the header and the line item. This way any taxes are calculated and checked on the $1,000. Other useful settings that I sometimes change are to display the periods, particularly if the period is not equal to a calendar month. That way I can check that the correct period has been entered. The document type option may be more useful for advanced users. Many users may accept the default and not care what the document type is, so often it defaults to either document type hidden or document type will be displayed. But if you do want to use different document types for any reason, you can change it here so that it shows document type ready for input. Normally you wouldn't have document date equals posting date, I just have it set that way to avoid manually typing in the date when creating a lot of example documents in the test system. It's probably a good idea from time to time to check that there are no parked or held invoices that have been forgotten by using the supplier invoices list and filtering by the relevant parked and held statuses as shown in the slide. If once an invoice has been posted, you select an invoice from the supplier invoice list using the material document number and try to add an attachment, you'll find you're unable to edit the document from here, and the attachment button is greyed out. There's further information in the SAP note 2670515 if you want to get your support department to check. However, there are two other options that you can use. You can either go to the related finance document and attach it there, or by using another app. To attach it to the finance document, you can go into the material document and click on journal entries to go to the accounts payable flow to get the finance document number, and then go to the document in the app Manage Journal Entries and click Edit. Or, if you really want to attach it to the material document rather than the finance document, you can go to the app called Display Supplier Invoice Advanced, which is based on the classic GUI transaction MIR4. First you enter the invoice number, the one that appears in the supplier invoice list, not the finance document. Then you press Enter to get the overview screen shown in the slide. Next, select Services for Object. Check under More if you do not see it at the top of the screen, and then click on Create, and you can choose the attachment. You should see a message at the bottom of the screen that the document was successfully attached. You can double check by going back into the invoice from the supplier invoices list, and you should see the attachment there. The abbreviation GRIR refers to goods receipts and invoice receipts. Usually the GRIR account in the general ledger where the goods receipts and invoice receipts are posted. This section is all about how to monitor that account and keep it neatly reconciled. Although perhaps more of a general ledger function rather than strictly accounts payable, I'm including it here partly because accounts payable may be involved in the reconciliation, and also because how invoices are posted in accounts payable will have a direct impact on the reconciliation. It may be a good thing for accounts payable to have a general understanding of the way the account works and what has to be done to correct mistakes. I've already talked a little about the three-way matching in the purchase or procure to pay section, where I explained the different documents in the flow, but concentrated more on the different types of documents. And in section 6, I'll talk a lot about blocking and unblocking the supplier invoices when we look at the payment program. In this section, I'll go into detail about analysing, reconciling, troubleshooting and clearing the general ledger side, in other words the GRIR account, and why it's so important to spot errors from the start. I'll introduce the new tools available such as the Goods and Invoice Reconciliation Overview and the Intelligent Goods and Invoice Receipt Reconciliation, and show you how to correct, clear or write off outstanding amounts. Just to recap, when you create a purchase order, there's no posting to the general ledger, but when you post a valuated goods receipt, the offset or credit will be posted to the GRIR account, with the debit to the account assigned in the purchase order, usually a cost, stock or fixed asset account. Then when the invoice arrives, a credit is posted to the supplier account, and the debit to the GRIR account, plus any relevant debits to tax accounts. Any credit notes or corrections should follow a similar process. In an ideal world, the GRIR account at the end of the period should contain only a few short-term timing differences, which will clear during the following period. The balance at the year end will form part of the accruals of the company and should represent mainly goods that have been received but not yet invoiced, but in some cases may also contain invoice items without a corresponding goods receipt. Many organisations just have one GRIR account. Potentially you could have more than one for different types of purchases. The GRIR account should always be set to automatic postings only. You should never need to manually post to this account. In addition to the GRIR account itself, you may have an adjustment account to separate out purchases with a debit balance from purchases with a credit balance if required. I'll explain how to do this later in this section. When an organisation first goes live on SAP or SAP S/4HANA, it's usually all hands on deck to ensure that the sales invoices go out, production continues, incoming payments are processed correctly, and the suppliers and employees are paid. In a best case scenario, reconciling the clearing accounts may be left to the end of the period to sort out. In the worst case scenario, the outstanding balances are only noticed at the year end and then by the auditors, when it's so much harder to investigate and clear up any mess and important to get it right. At this point, the organisation is invariably surprised that invoices appeared to be correct and have been paid, but nevertheless have left a messy trail of incorrect postings which should have been much easier to correct at the time. The app in the slide is the General Ledger Display Line Item app F2218. The slide shows the GRIR account summarised by purchase order item, using the assignment reference field so that you can see that in some cases the balance is not zero. If we drill down into one of the items, you can see that although there's a goods receipt and an invoice receipt, there's still a balance, indicating that the related invoices and goods receipts do not have matching quantities. Although this could be a timing difference, in this case this is an example where something has gone wrong, which needs to be investigated and corrected. Although the GRIR account is important from a finance and audit point of view, and historically was key in the reconciliation, there are now new tools that can be used to analyse and tidy up any discrepancies, so that the GL account gives an accurate picture of the accruals at the period and year end. The slide, for example, shows the same transaction as the previous slide, but with more detail using one of the new tools. In this scenario, the invoice was in fact manually unblocked for an urgent payment, which solved the problem of an angry supplier. But as the invoice was originally blocked because of a quantity discrepancy, unblocking the invoice for payment did not update the GRIR account, so a debit balance was left on the GRIR account, leaving the cost or stock as understated in the accounts. We'll go into more detail of this app F3302 later in this section. The goods receipt should really have been corrected in the period it was posted, and the block removed automatically by refreshing the GRIR matching, rather than manually, to ensure that the correction to the goods receipt did in fact clear the quantity difference and there was no additional price discrepancy. Investigating quantity discrepancies at a later date is much harder to do and difficult to fix, especially if the stock has already been consumed or resold. And even if you do find the error, it's not always easy to correct, especially if stock adjustments have been made in the meantime. If the invoice was posted against the incorrect item, it will be hard to reverse as it's already been paid. The slide shows the postings from the previous example, using the app Display Journal Entries in T Account View F3664. The first posting, coloured blue, is the goods receipt, debiting costs and crediting the GRIR account. The second posting, coloured orange, is the invoice, debiting the GRIR account and crediting the supplier. The third posting, coloured purple, is the payment, debiting the supplier and crediting the bank clearing. The most important thing to remember about the GRIR general ledger account is that its functionality is entirely driven by quantities. If you order in goods receipt 10 items at $10 each, as long as you enter a quantity of 10 in the invoice will clear the GRIR account. If the invoice is for $900 or $110 because the price on the invoice is $10 lower or higher than the goods receipt and purchase order, the system will still post 10 times 10, in other words $100, to the GRIR account. And in order to balance the posting, it will post any difference to the same GL account as the original goods receipt. The goods receipt posting will take the most likely value. If no invoice has been received at the time the goods receipt is posted, then the most likely value for that purchase will be that which is in the purchase order, although stock items valued at standard cost behave slightly differently. If the standard cost is different to the purchase order, any difference will be posted to a purchase variance account. However, if the invoice was already received before the goods receipt, the amount posted to the GRIR account will be the invoice amount. So the goods receipt posting has to take the same value as the invoice in order to clear the GRIR account, assuming the quantities match. The value used for the goods receipt is only the accrual. The amount payable will always be what's invoiced. Stock postings can be tricky for a number of reasons, depending on the stock valuation. If the product or material is valued at standard cost, the stock will always be updated at standard cost whatever happens in the postings, and the differences will go to price variance account. If the stock is valuated at moving average price, you may get odd fluctuations if the postings are not made in a timely manner. Imagine a purchase order for 10 materials at $5 each. There's currently no stock, so when the goods receipt is posted, the stock is updated at $5, and therefore the total stock is $50. Almost immediately, let's say those 10 items are sold and removed from stock. After that, the invoice comes in at a different price. Let's say it costs $1 more, so that there's a difference of $10. However, if you post the $10 to the stock account, that doesn't make sense valuing the stock at $10, as there's no stock because you just sold it. Even if you have only one item, you don't want to post the whole adjustment to that one item. Similarly, if the price is less, you don't want to end up with a negative stock value. Non-valuated goods receipts have no postings to the GRIR account, and if you're using goods receipt-based invoice verification, that means that the invoice is posted against the goods receipt line rather than the purchase order line, so you cannot post the invoice if the goods receipt has not been posted. Finally, just to reiterate, there's no connection between payment blocks and what's on the GRIR account. Removing a payment block does not make a posting to the GRIR account and will not clear any outstanding balance on its own. You can have a line item which has a balance on the GRIR account but is not blocked for payment on the supplier account, and you can have an item which is blocked for payment on the supplier account but has no balance on the GRIR account. We'll go into this a bit more later. The slide shows the app of the standard GUI transaction F.13, which can be used for different types of clearing, for example suppliers, customers, and GL accounts, but only those open item ones that allow clearing, for example the GR/IR account. The clearing is configured to work on certain fields. For example, the GR/IR account should normally be configured to group by the assignment field, which should contain the purchase order number and line item. If the total of all the line items with the same content in the assignment field is 0, then it can automatically clear them. The advantage of this is that when you look at the account and select only the open items, you should see only unmatched items, making it easier to check and reconcile the account. This SAP and the GUI transaction can be run directly or using the Schedule General Ledger Jobs app F1927. The advantage of using the Schedule General Ledger Jobs app is that you can see the history of what's been run and the job logs of the results. Essentially, the fields that need to be filled in are identical and the results are identical, so I'll show you a couple of screens using the app directly in test mode and then demo the complete run using the Schedule General Ledger Jobs app. In the example, to clear the whole GR/IR account, in addition to the key fields such as the company code and posting date, you need to select the Select GL Accounts field and immediately below it enter the account number of the GR/IR account, in this case 21120000. However, you can also run the transaction just for a single or range of specific documents or including items up to a specific date. Normally, you should not need to select the GR/IR account special processing indicator unless clearing by purchase order line item is not enough. For example, you're using goods receipt based invoice verification and want to clear using additional criteria. For the first example, I'll not select the box, but I will show you what happens when it's selected shortly. You can choose whether to select test run or not, and also whether you want to see everything or just the items that the program can clear. As a separate task, you may want to review items that it cannot clear if you've not managed to reconcile everything using other tools, for example with legacy systems or where there have been changes to the system in between posting, for example, a goods receipt and an invoice. You can also include a tolerance if you want to clear items even if the balance is not 0, but there's only a tiny difference. There is an Execute button at the bottom right of the screen to run the transaction. This slide shows the results of clearing for just one purchase order, which has 4 goods receipts posted but only one invoice, and the GR/IR account special processing indicator has not been selected. The items that match are highlighted in green and would all be cleared together if this was not a test run. This slide shows the items in the purchase order from the previous slide. The purchase order has goods receipt based selected, and as you can see, although everything has been posted against the same item in the purchase order, each invoice has been matched against a specific goods receipt. Finally, this slide shows the results of automatic clearing for the same purchase order as before, but this time I've selected the GR/IR account special processing indicator. As you can see, it has grouped together the goods receipt with its related invoice for clearing, rather than grouping everything related to the single purchase order line item.